You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in this wild market we're all living through together? Let's find out, shall we? It is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as on the network that all of you folks are binging. A couple reminders at the top of the show. Make sure, you're subscribed to the full network. If not, you're missing out on a bunch of other stuff, including European Market Brief, the Option Block, Options Boot Camp, Crypto Rundown, Futures Rundown, This Week in Futures Options, and so on and so forth. Of course, many guest appearances from people on this show you may or may not like Dr. VIX and others. He was just on Tuesday, from a cab nonetheless. So good stuff out there. So make sure you subscribe to the full network. And of course, if you want to join us for the official after party of Vol Views, where we break down a whole bunch of wild trades, theoptionsinsider.com/pro is the place to go to sneak behind the velvet rope. That bouncer, she's nasty. She's mean. She'll get you. You got to get past her by heading on over to the pro. As we go around the horn, see who's joining us on the old program today. First, we just talked to him earlier this week from a taxi cab. He was doing his own taxi cab confessions, but now he's back in the hinterlands of Chicago. None other than Mr. Dr. VIX /VStocks, a.k.a. Russell Rhoads. Mr. Rhoads, welcome back from your many and varied journeys, sir.
Yeah, man, I'm too old for this stuff. I'm having a heck of a time just getting myself out of bed on Friday after a global volatility summit and a SIBO RMC Quant summit, which I'm thrilled that they did that. Going downtown, I don't go downtown anymore. I nothing good happens when I leave my couch, but this week some good things happened.
Yeah, both you and the Flowmaster right down the street from the studio. No one stopped by to bring me some spicy pickles.
You won't let me in.
From the SIBO.
I've been begging to come back. Don't you do that.
From the SIBO break room. Delicious spicy pickles over there in SIBO land. So we'll get to all of Russell's conference breakdown. We need a special drop this week. Russell's conference rundown. He's got so many goodies for you, listeners. See his commitment to the cause. He will fly to New York. He will sit for an hour in a cab to do a show and spend $100 on the meter just so you don't have to, listeners. That is the commitment. Then he'll go down the street and deal with the Flowmaster for a whole day just to get some more info for you. So his level of commitment to the cause, listeners, is above and beyond as we keep on rolling out to a guy who never goes anywhere. He is happy in his compound on the shores of Maine. None other than the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show, sir.
It is good to be back in volatility land with you and Dr. VIX, the aforementioned.
The aforementioned indeed. And now it is time to mention some vol action. It is time for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Volatility Review, the portion of the show where we break down the week that was, and indeed still is, from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. And speaking of unusual activity, we kind of got some all this week in the vol market and indeed the broad market. We were saying on the show last week, there's a good chance the market might, or I should say the government might shut down on Wednesday. And what does that mean for vol? We saw people specking on both sides of that. People coming in with their usual upside trades, some downside as well. And now here we are, day 3 of the government shutdown, listeners, as we're recording this. And the markets have, for the most part, not only shrugged this off, but pretty much celebrated it. They've had new all-time highs literally every day, today being no exception. As we're coming into the start of the show, it does seem like maybe some of the bloom is coming off the road, but not much. The NASDAQ has the temerity now to dip into the red as we're starting the show, off 0.05%. So we're not talking a lot here, listeners. S&P up about 1/3%, so still rallying 1/4 to 0.5% pretty much every day into the shutdown here. The Dow up a full 1%, so the Dow says, shut down, schmut down. We don't care out here. And VIX Cash has been kind of hanging out at this 16/4 to 16.5 range pretty much all week. So for those of you who were rolling the bones on any sort of upside, 18, 19, 20, God forbid, 20 and beyond, so far that premium, all that juice has gone to die. 16.25 as we're kicking off the show. Up a mighty 0.5 point from where we were this time last week. A good buddy, Scott Nations, was volley his at the money vol at a 13, up about 0.3 point. And good old VVIX coming down, 94, down 2 points from where it was this time last week. So if you had a celebration in the major indices and a big nothing burger or a modest sell-off / now today with today's move, a little bit of a rally involved, and you pretty much had it pinned, listeners. It's kind of so far been naught but green on the screen and mostly red on the vol screen post-shutdown. Now, that said, we're on day 3. If this thing drags on, something will eventually break in one fashion or another out there, listeners. But right now, it's kind of party mode out here in the markets. Let's go around the horn. Let's start with the doctorest of VIXs. Let's start with just your thoughts in general on this week, Mr. Rhoads. We'll get to all the conference fun in a second because I know you have a lot of it. But just your thoughts on, we were heading into the shutdown. There were thoughts this might be at least a modicum of a vol event and might at the very least give the bulls some pause out there. And the answer to both of those has been a resounding no, sir. Are you surprised?
Yeah, I am a bit surprised, but when you start to, and needless to say, I get through IU, I get daily media requests, and oh my goodness, where they're, what is the impact on the shutdown going to have on the stock market? And needless to say, I was, I really didn't have a strong opinion on it, but I'm not really shocked that it's been a nothing burger so far. And it's hard not to get the politics into it, but maybe the market thinks this thing will get resolved. That's one thing, but there might be a part of the market that likes this a little bit, just because it may introduce a bit more fiscal responsibility to the legislative part of government. They have, and I don't want to get on my econ soapbox because I'd go for a half an hour on it. But the way you manage economy is the fiscal side, which is our elected folks, and the monetary side are supposed to work together. And monetary has been carrying everything gosh, for probably 3 or 4 decades now in my mind. And that doesn't include just the United States. That's Christine Lagarde has been pretty aggressive about this, about how, the ECB can only do so much. So, that might be why we're seeing such little volatility associated with such a nasty looking headline. But we've been, as I finished up and felt all smug about my final line there, it just occurred to me that we could say that about a lot of things that we thought should be volatility events over the last 6 months.
We could several years.
Which led me to using the Chat GPT to try to come up with an antonym for fear index. It's the confidence index or something like. I haven't found a good one yet. But it sure as heck ain't the fear index right now.
No. I think we could maybe get to that. That might even be the subject of our question of the week. Hint, hint, in a little bit. Very timely with that one. That is, of course, the debate that is raging in vol circles. We'll get to that in a second. But first, to the shores of Maine we go, where he's just locked in his death spiral with the clam pirates. One shall stand. One shall fall. Who will it be? Will it be the Rock Lobster? Mr. Rock Lobster, sir, what's catching your eye? And what are your thoughts on the market so far? Kind of shrugging the shoulders, if not popping a bottle or two 3 days into the shutdown.
I think real simply, there is, I believe right now, the argument is over spending that was created post-COVID, meaning like in those just COVID days, when the government was just throwing money at everybody like crazy. They jacked up these the Obamacare premiums or reimbursements or something like that. And now the government is trying to turn it off. Like, hey, we got to stop spending money, right? Just get back to 2019 levels. And we have a balanced budget. The Republicans, they had their spending bill. They basically just kept all the tax structures that were in prior to a couple of spending cuts. But, the Democrats are holding the line. I mean, it's clear because that's what the argument is. And at this point, the market generally would rather have the government arguing and doing nothing, because the less they do historically, the better. Watching the market for, 35 years. It is rare the government does something that is ultimately, ends up being a positive. Because they keep spending money and we don't really get the result out of it. People can argue with that, but, every crisis we've had has just been another reason to increase government spending. And I don't know how much good it's done us. At least at this point, the market is, as far as traders go, they're like, the stock market's not necessarily the economy. They're looking at, a narrow band of stocks and they're buying it up. That is one side of the coin. If the government can slow down the spend, ultimately that will be bullish because they're running an insane deficit. Like, Russell said, hey, anytime you guys on the fiscal side want to come over and cut some spending would be great. Exercise some restraint. But like I said, Congress has a very hard time walking back any spending they authorize, even when it's an emergency. And my fear was COVID was such an egregious spend that they've now tested the limit of how much they can spend and congratulate themselves. So Trump also owns the record for the longest shutdown. And since he's Donald Trump,
go beat it.
He likes doing everything bigger and better. So it would not surprise me if he lets this shutdown go for as long as possible and uses the opportunity to cut more agencies, fire more people, not pay somebody something. Like, there's literally, since the government doesn't appropriate the money, Congress doesn't appropriate it, there's no appropriation. So it can be cut. So this gives him wide latitude, actually, to go Doge, in the coming days. So there is no incentive for him to restart things. And the only thing I can notice with the government shutdown, which is kind of sad, is we didn't get a non-farm payroll report.
Yes, we are the true victims. No numbers that we could trade around now.
And so I think the government has to spend less. They got to bring the budget in under control. And unfortunately, this is the way it has to be done. I don't know how else to say it. And they're still spending a lot of money, everybody, by the way. They're still spending a lot of money. I don't know who gets it. But I would say that from a volatility point of view, I guess we can go to the vol surface and I'll talk about that. But, you would think since realized volatility is 2%, that VIX would not be 16 or 17 and the futures would keep going up. That is not sadly how it works in event pricing, but I will wait on that for the vol surface.
Yes, our vol fix every first Friday now. What are we going to do with ourselves here, Mr. Rock Lobster? My son is learning macro now, taking macro. He just learned about, the Bureau of Labor Statistics and the non-farms report literally a week ago. I came home and said, there's this number that comes out every first Friday. And literally the first one he's cognizant of doesn't happen. So there we go. There we go. That's the
then
world.
You can say, welcome to Uncle Sam.
Yes, exactly.
You will be disappointed, and then they'll take your taxes.
Yes, exactly. All right, Mr. Rhoads, I have saved time for you. I don't have a drop for you. Maybe I'll see if our editors can put something cool together for you. That is something like Russell's Conference Rundown. Nice and zany like that. But Mr. Rhoads, you have been hither and yon this week, getting your finger on the pulse of the bleeding edge of vol research. What you got to share with our folks, sir?
Well, first off, here's my intro music. On the road again.
Okay.
Russell Rhoads is on the road again.
I have to pay a licensing fee for that, but okay.
Mark used to break into song every once in a while. Mark Sebastian, so I got to top that one. So I went to a conference on Monday, and I went to a conference on Thursday, which is also going on today, but I just, sometimes life gets in the way. And I even texted Mark Longo from the conference because this time last week, we were talking about how your survey is gold more of the fear index or the big concern indicator versus VIX. And one of the speakers at one of the conferences I went to, and it's all Chatham House rules and stuff, so I'm gonna not say where these things came from just to keep myself on the attendee list. But probably the best statement I heard was this year's gold move is like VIX going to 100, and it's very confusing as far as the dispersion between the two. Well, maybe they're listening to us. Maybe they listen to all of you.
I think they did listen to the show, so we have to.
Yeah, because but that's a theme that anybody could kind of pick up on. So. And then just from a macro sense, they felt like that the amount of central bank coordination is just continuing to deteriorate, that they worked very well after 2008. They worked very well around 2020 a bit. And there was a claim, and I didn't see exactly other than news if there was anything quantitatively to back this one up, but said that there was a feeling that market volatility had been suppressed from 2010 to 2021 by the Fed and other central banks. That anytime we had any volatility whatsoever, they'd step in, buy things, try to smooth the markets out, et cetera. That did go away in 2022. It seems to, in my mind, it seems to be coming back a little bit. Now, this was said before the shutdown and actually doesn't have anything to do with the shutdown. But it's an interesting statement. It was just saying anybody that is involved in, the quantitative portfolio management, like I guess we kind of are at this point, in order to maintain an edge and remain competitive, you need to be looking at alternative data sources. You need to be looking for private types of surveys. And if there's somebody listening that wants to jump into a business opportunity, I actually think some of the things that the government's giving up, and they're not giving that one up, but I'll give you an example in a second. It does create some opportunities ADP does that employment report. They're doing it more as an advertising thing, not charging for the data. But I do know that there are some private data services that will try to give you a heads up ahead of time of what one of the public numbers may look like. Now that we have fewer people manning the phones at the BLS to do the surveys, et cetera, there's less reliability on the on the federal data.
So you're saying there's an opportunity to make a spin off your own BLS, a private BLS, if you will, sir?
Or something, and I'll give you the example. Now, I apologize, but give me 30 seconds here. I promise it's on point. My youngest is doing meteorology at Purdue. There is now less accuracy in weather predictions because due to budget cuts, the National Weather Service launches 50% fewer weather balloons each day.
Oh.
You can't tell me that I can't take that drone in my toy closet and put something on it and send it up and bring it back down cheaper than the government's been doing it for the last 50 years. You can't tell me and that's what I was explaining to her. I was like, because she's mechanical engineering and meteorology. I said, go build something.
And there's actual money there. I mean, there's people need accurate weather for crop reports and everything else. There's some size money in the commodity market behind that.
And she broke my heart because I did say, she said, so because of that, I'm thinking about a second major. And I was talking about weather derivatives and stuff. And I go, oh God, she's going to do business. She's going to, because none of my kids will do it. And lo and behold, she said, no, I want to do mechanical engineering so I can build some of these things.
Oh.
There's another year at Purdue.
Yeah.
You know what? I don't mind at all.
Good engineering. So at least she didn't come to you and say, I want to major in dance or something like that, right?
Dude, that's her minor. You take that back. Okay. Let's see. They talked about the gamma situation with the big ETFs that are consistently selling options. They think that's been suppressing volatility a bit. One of the interesting things here, and I want to do work on this one. There's always one big thing I want to do the work on, but a speaker claimed that using puts on the high yield ETF, HYG, is better in market drawdowns than using options maybe on the S&P 500, et cetera. So again, I'm taking that at the surface for the moment and want to do a little digging on it.
That sounds like a back test question for Mr. Matt.
Oh, yeah. No, absolutely. So let's see. Longer dated SPX volatility. They say it's suppressed by a lot of autocallables that are out there. I mentioned the ETF gamma supply. They did say that the inflows have been fairly decent for VIX ETPs in 2025. I don't know if that's a completely. I look at it every once in a while when I'm on here, and it never really seems to be that positive. I
might take umbrage with that point. I don't know if it's been a robust year for them.
Yeah. And then somebody used a phrase, and I mean, we all do this, and I probably admit my human frailties in public more than most people. But I was a bit zoned out, and then a speaker said, "So that's what we refer to as beta Vega." I'm so mad at myself. And then I had to get in a cab and talk to you.
You missed the definition.
Beta Vega. Actually, it was I did pick up on what I can't explain it as well as people who've known about it longer than a couple of days, but it's basically trying to determine the volatility contribution to indexes from the individual stocks with respect to the option pricing. And it gets into dispersion trading. But I liked that. Beta Vega. I like that one a lot. Oh, let's see. I will say at the SIBO conference, they did started talking about a new product that they're launching. It's called Lead and Lag Futures. They'll take they've got an equity index of 100 stocks. I wonder how similar that is to the old school OEX and the new school S&P 100. But they're not using S&P 100 as one of the names. Somebody should let our friend Kathy know that.
I was going to say, Kathy running the show over there.
Kathy, that's kind of funny, isn't it?
Yeah.
But the lead lag futures, they take 100 stocks. They've got the 100 best, the 100 worst. And it's kind of a neat trend following idea in my mind, where you can get exposure to the stocks that are continuing to move up. And they said, when I first saw the slide on it, I thought it was a futures contract that was long one and short the other. But it was being depicted that way. Like, you would want to short the weaker ones and go long the stronger ones, which I'm afraid that leads to a problem where you end up in a disconnect in, where, like with some ETFs, you have what the closing value was and what the quoted closing value was. I'm concerned if you put a future out there that's geared toward being short, one that's geared toward being long, that, that you're going to have a difficult time as far as the index staying in line, the future staying in line with the index like they should. Especially for one that's a kind of an unconventional basket. If it were the S&P, they could just use SPY or something. So that was my only little thing about that. Had some people talking about how the Fed is actually paying attention to box spreads and as a risk-free rate. They even called it SPY door.
That seems a little savvy for the Fed.
Spybor. But this was at the SIBO one, and the SIBO was a RMC for quants. There's no social events at that one.
No,
which I like. I liked RMC before they started doing all that.
You walk into an RMC for quants, everyone knows what a box spread is. You walk into the Fed Board of Governors, I'm guessing most of them don't know what a box spread is.
Oh yeah, no, there wasn't even an explanation. And they were, and then somebody was also talking about the borrow rate for certain stocks is very different than you would expect it to be, and there might be an opportunity in there. And I missed it this morning, but apparently there might be an update to how they used to the skew index.
Oh, Henry did allude to that. We were doing a pro Q&A a few weeks ago, and we were kind of, let's say, maybe slamming. And he came in the live chat and took umbrage and said, we are updating it. So he has alluded to that, yes. And
it should be, although I think it was, I feel like for what it was supposed to do, it made an awful lot of sense. It wasn't really, a lot of the indexes that are created over there are created in order to eventually trade something on them. That wasn't the idea with skew.
Not that one.
Yeah, it really wasn't the idea with skew. And the person who created it, who's just freaking brilliant, really created it from more an academic standpoint. So I can see maybe wanting to make some changes. I wonder if the changes are leaning toward maybe trying to be able to trade with it.
That would be awesome.
Then you can do, if I were going to do something to trade against, I would do VIX futures versus VIX.
VIX futures. There we go.
You like that?
I like
that. So there you go. I mean, that's for the most part. That's I don't want to take up. We're already at the half hour mark. Too many other things, but a lot going on. A lot of talk about. There always seems to be a theme, and the one thing that I heard at both conferences was a lot of debate over whether dispersion works or not. No, does distortion in the real world, does it actually make sense, or is it something that's really cool mathematically but damn near impossible to implement?
That's maybe a debate SIBO should have had before they decided to come up with their index and their products. Yeah. But an interesting one. See, listeners, Russell spends thousands of dollars and a week's worth of travel so you don't have to. That's his level of commitment just for you. Just for you out there, the listener.
Finally, and constant listeners will know why this is kind of funny. Bumped into Ewan Sinclair as I parked my car. We said hi to each other. He didn't blow me off, and now we're friends. We had just never really met in person before, which is kind of unusual if you think about it.
That is unusual.
Yeah. We had once, and I think he was in the zone like a lot of smart people get sometimes.
The zone.
And I stole one of these.
Oh, there you go. Yeah, Henry promised me some cool swag from this event, so we'll see. We'll see what comes to pass here, listeners, as we keep on rolling out to the land of the vol surface. What's going on in the VIX futures term structure this week, listeners? Pretty much spoiler alert, a whole heck of a lot of nothing. In fact, the October future is almost literally unchanged as we come into this portion of the show. The no future actually coming down slightly again. We are heading into day 3 of the shutdown. The no future hanging out right around 19 and a quarter. The cash almost 1660 when we ran this report a few minutes ago, listeners. And again, that OC future hanging out a little bit north of 1780 right now. So still quite the chasm between the cash and October, and yet again, another leap up from October to November. Then we kind of more gently drift the rest of the way until we get out to, looks like by June of next year is where we have our apex right now, literally exactly 21.5. And that's about as far up as we go on the curve out here. Mr. Rock Lobster, sir, what is catching your eye in the land of VIX futures this week?
They're not moving.
There we go. That's the whole segment. We're done.
They are not moving. The dreams I had to build the new wing of the Giovinazzi complex with my October VIX puts are going away quickly right now. I thought this is going to be the biggest layup on the shutdown, and right now I'm wrong. I'm feeling very wrong. It is starting to trade more like the run-up to the election, where you had positive market activity, stocks kind of going up to all-time highs. The market pretty much predicted that Trump was going to win, even though nobody else did or mainstream media did not. And right now, very similar action. The path of least resistance is up for stocks, but traders, nobody wants, you're a liquidity provider, Mark. How does volatility go down? Somebody has to sell you something. And if they don't sell you something, are you going to lower those option prices for no reason if you're not buying them? No. So the way VIX is priced and the way the futures are priced, that, hey, if nobody's selling and taking the vol down, it's going to stay there. And when you have an event pricing, traders tend to creep up the implied volatility as you move toward expiration to try to keep those premiums relatively the same. And it looks like kind of like VIX is slowly rising. But when I look at upside calls in SPY equivalent to SPX for everybody out there, when you go out like 30 days, so I'm into the November. Again, I don't think I'm the only one with the Trump wants the longest shutdown record thesis. You go to like the 680 calls in November, and the volatility on those calls has been going up since the shutdown started. So when you're looking at the 680s in November and the vol's going up on a strike that's 10 handles, 100 handles out of the money SPX, I don't know what to tell you on that, but vol going up is vol going up. And traders are, if the government, I believe if they can have some sort of control over spending, they hold the line, I think that will be we'll have a kind of a kick higher in stocks. It might be a sell the news day. That might be a short-term top, but as well as I do, when you're standing in the SPX and they're buying upside and that skew keeps getting pulled up, right? The at-the-money volatility just keeps growing keeps riding with with SPX going up. Vol doesn't go down. Even though for, VIX should be going down as SPX rallies, but it can't if volatility per strike expands. And I think that's where we are right now. And it's gonna keep going like this until it stops going like this. It's gonna stop when the shutdown is done. So I think vol trade, vol futures it is a morass of nothing in the short term. All the actions in the equities.
A morass of nothing is a good way to describe the numbers for this month. By the way, just the VIX futures numbers, the options numbers are ridiculous. I mean, we talked about these yesterday with the Flowmaster. Check out the option block if you want a deep dive. But the numbers just coming out from OCC yesterday, listeners. September, just off the charts, up 45.4% from a year ago. I mean, maybe you could argue September of 2024, maybe a little quiet, but still, just 45%, that doesn't happen, listeners. Equity options alone up nearly 67% year over year. These volume numbers, I mean, we all love it. We all love that everyone's coming to play. These are just absolutely astronomical. I mean, we're talking threatening 1.5 billion contracts now in terms of total volume coming out of OCC. It was about 1.4 billion contracts in September. So just absolutely, we just passed a billion reliably not too long ago. Now we're already nearly 50% beyond that. These are just absolutely wild numbers. I bring that up, Mr. Rhoads, to say the only dark spot in this is kind of going back to kind of reinforcing your point you've made that once VIX futures make a nice high, they have a hard time regaining that lost luster. And that is the case right now. Everything else is up 20+% or more year over year. VIX futures down another 6.6%, Mr. Rhoads. Nobody wants to trade them anymore, apparently.
The volume, I think, is just with no economic numbers, we're probably not going to get that much volatility. And honestly, if I think the next move in the shutdown would probably be that it's coming to an end, and you would naturally you think you'd want to be short volatility. But what if the market's not happy with the outcome, what the new plan is after that? So I think a lot of people are on the sidelines because they didn't read how it would react correctly this week. I mean, freaking the day before the shutdown, VIX closes at 1628. The next day, it's up a penny. I wish it had been unchanged. That would have been a better story. But what has been going on with the VIX futures between this week and between when we were sitting here last week and right now? The spread between spot and the October has dropped by a full point. And we had been talking about how wide that spread was. It was 221 this time last week. It's $120 right now. On Monday, it had already dropped to 163, but Tuesday 140, and then Wednesday and Thursday it's down to 120, and we're just stuck there now. Going along with what Andrew just said, as far as everything's, if there just nothing really is going on right now. You've got to assume that we still, even though next week is the 15th, not next week, the 15th is not October expiration. We still do have plenty of time until VIX expiration. It's on the 22nd this month, which I think is about as late as it possibly can be, which may be part of the reason that there's still a bit of a spread in there. But if we go the next, what's the record on the shutdown? Like 18, 19 days or so? If he beats that, and we're not getting numbers or anything else, probably going to see
30 days, Russell. It's over.
Oh, is it over 30 days?
30. Oh, yeah.
See, it's so significant, I can't remember. But I would just assume that VIX sits there with the 16 handle and the futures just drift their way down.
Yep, that sounds about right. I do recall on the show last week, Mr. Rock Lobster, when you were talking up those 17 puts, I think for $1.05, I said even that seemed like I was uncomfortable even shelling out that amount of premium in VIX right now. It's just that kind of market. If it's over a quarter, I'm just not paying it in VIX right now. Hate to toot my own horn, but at least for right now, that seems to have been the way to go.
It's very prescient.
Don't shell out anything. Yeah, it's one of those times, listeners, where we are in some rarefied air. Is that translating to a lot of volume in VIX land this week? Well, we'll get to that in a second. First, let's break down our top 10 right now. What's hanging out for size in VIX land right now? Again, we're still hanging out 7-3 calls over puts. We've been locked at that for a month and change. That hasn't really budged. Number 10 cost you $1.78 to break into the top 10 in VIX land today. That gets us going right at it. Ox 60s to kick things off, listeners. Number 9, our first of 3 puts, 188,000 of the November 15 puts. I've said it ad nauseum at this point. July, August, September, October, November. There's just so much premium going to die on this 15 strike. It's ridiculous. Number 9, maybe November is the time. We shall see. 188,000 of the Nove 15 puts. Number 8, $1.94 of the Nove 25s going in the other direction. Number 7, Exhibit B, 202,000 of the OC 15 puts. And we know the SEP 15 puts went to die. I mean, it's just been, people keep tilting to that windmill, and unfortunately, it's not very rewarding. Number 6, 207,000 of the OC 15 halves. So maybe this person got the memo. 15's maybe a bit of a bridge too far. Maybe you have a better chance on the 15 halves. Number 5, 239 of the OC 25s. Number 4, 241 of the Feb 47 halves. Again, we do this dance every week if you don't like those. Number 3, right above it, 252 of the Nove 47 halves. Number 2, 271,000 of the OC 35s. And the big dog yet again. Man, the 60 strike kicking us off and wrapping things up, 287,000 of the D60s, listeners. But now it is time to get wild. It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, sir, have at it. I dare you to find some good flow this week.
It wasn't that easy. We'll just leave it at that. And we've got to, we've just got to be honest. The reason that you play that music twice is because I'm always scrambling around trying to find my notes.
I buy you a few minutes.
On Monday, a couple of terrible trades with VIX at 1593. And I'm seeing, and the reason I'm going to mention this one is I'm seeing versions of this almost every day. And I don't know why. So somebody bought a few hundred of the October 1st 16 puts on Monday, like 2 minutes into the trading day. They paid 35 cents for them. The market was 27 cents by 32 cents. Let the market calm down a bit. You might get better prices. And about a few minutes later, somebody bought a couple of hundred of the October 1st 15 puts for 5 cents. VRO was 1684. I'd have a hard time. And it appears to me that these were not exit trades. I thought they might be covers, but I can understand being long volatility into Wednesday morning settlement, but not short. Even keep in mind the shutdown, which we didn't know how it was going to act, was hanging over us. So the VRO, which is the VIX settlement, I throw that ticker out there without giving an explanation, was 1684, pretty high. These trades could have worked. We did in the second week of August. We did have a VIX settlement close to 14 and a quarter or so. On Tuesday afternoon, with VIX at 1650. And I'm assuming this is a shutdown trade. Somebody bought 3,500 of the October 15th 19 calls for $1. That hasn't worked yet. And then on Tuesday with VIX at 1638, somebody bought 800 of the October 8th 17 calls and sold the 20 calls for 46 cents. 71 cent cost, hoping for a spike to 20 next week. And I think that trade might have been, there was a lot more activity there wasn't a whole lot of activity at all, but there was a lot more activity with October 8th than October 1st options. And I think some of that related to we just didn't know what October 1st was going to bring with the shutdown. Another, like on Wednesday, another buyer of the October 15th 16 puts and 15 puts. And they were separate trades. Again, not it's like almost every day seeing those with different expirations. So I assume somebody thinks that they're going to get $1 or $2 out of a settlement and end up paying for all those small premiums. On Thursday, just one trade kind of interest. I like this one okay, except I think the dollar risk reward's kind of lousy. Somebody sold 500 of the October 8th 18 calls for 47 cents. They bought 500 of the 19 calls for 32 cents. They took in a 15 cent credit to risk 85 cents. Based on size, that was an opening trade as well. And then on early today, and we had a seller of 1,200 of the October 8th 18 calls for 36 cents who bought the October 8th 20 calls for 17 cents. That's a 19 cent credit with a risk of $1.81. I just kind of looked at some other trades, and I think I would have been more willing if I think VIX is just going to be dormant. And we haven't seen a 17 handle in a week or so. I think I would have been more comfortable buying the 1917 put spread for $1.55 that would pay off 45 cents if VIX is under 17. So the max loss is a point lower, but I feel like it might have been a better alternative from a dollar risk reward standpoint. And if we run to 17, we're probably going to run to 18. If we start to break, I do think we would break to possibly the low 20s pretty easily.
That's a big if we can break
if
anymore.
We break.
VIX seems locked in its current range, at least for right now. Let's see if that range is translating into some volume, shall we? Today, the answer is it's all right. 560. It doesn't sound like a lot when the ADV was close to 1 million contracts a day not that long ago. That ADV has come in down to 730. That's down nearly another 100,000 contracts from this time last week. So I said for a long time that 950, 1 million contracts a day, that's hard for VIX to sustain. And you need a lot of volume, obviously, to maintain that. And that just has not materialized. We've seen days with the VIX putting up just a couple of 100,000 contracts. That ADV is going to come crashing back to earth. 730 sounds like a more realistic number. Putting up 560 today. So in that context, 560 sounds a lot better, especially when you hear some of these other numbers I'm going to talk about in a second. The hot option out there today, 103,000 of the Jan 60s, and they got 103,000 as well of the Jan pars. Looks like we got a Jan 60 par vertical. Listen, looks like the price is around 30 cents, and it's opening on both legs. So there you go. 30 cents. You like that? 40 handle upside vertical in VIX, 30 cents. Does that float in your boat? Number 3, 42,000 of the OC 16 puts. Number 4, 33,000 of the Nove 25s. And number 5, 30K of the Nove 17 puts. I'm going to kind of run through most of these listeners because there's not a ton of paper this week, with the exception really of today and Monday. Yesterday, exactly 500,000 contracts on the tape. Not a ton. I mean, strange, first off, that exact even print. We don't see that very often. But outside of that, not a ton unless you're really excited about 37,000 of the OC 15 half puts and about 36,000 of the OC 18 puts. Looks like a lot of that paper could have been closing as well, so even less sexy in retrospect. Wednesday, 406,000. You can see why this ADV is coming in. The big dog out there, such as it was, 19,000 of the OC 30s. About 31 cents for those bad boys. As we keep on rolling to Tuesday, also kind of sleepy, 431,000 contracts on the tape. You'd think Tuesday and Wednesday heading into the shutdown and having the shutdown would have ginned up a little bit more paper, but the answer was no. Tuesday, 431. The hot option out there, about 37,000 of the OC 15 puts for 14 cents. I won't belabor my point on the 15 strike. You've heard it enough. Monday, the only real quote-unquote active day of the week, 821,000. So it came out of the gate hot. The hot option out there was 160,000 of the Nove 32s, followed by about 40,000 of the Dees 35s for number 2, 37,000 of the Dees 75s for number 3. It looks like there could have been some vertical action there as well. A 40 handle Dees vertical, listeners, looks like it went up for about 70 cents. So are you down for that, listeners? Number 4, 36,000 of the OC 15 puts. And number 5, 23,000 of the OC 60s. Mr. Rock Lobster, anything catching your eye in the VIX options verse this week, sir?
Besides the fact that all my puts are just melting away to zero.
If only someone had told you that a week ago.
Somebody did.
I'm here to save you money, sir. I'm here for you.
I appreciate it. I have to say, VIX, I did see, it's funny. I think there are other people like me with Hope Springs Eternal. What's funny is there was again a lot of put buyers this week. I thought in the October cycle. Today the 16 puts 42,000 are trading. So I think there is I could see that weekend shutdown over. It's possible. But as of right now, relatively light VIX action. I think I might be the only one who doesn't think the market can go down, but who knows? Maybe we get a little spike. I do see some October call buying today. Relative to put buying, it's like it's not even close. It's like feels like 10-1 October calls over puts. So, but yes, I've mostly been hiding my eyes from the VIX screen because I know it's going to say every day. It's going to say unchanged every day.
Well, speaking of unchanged, that pretty much summarizes the entirety of the VIX ETP universe this week, listeners. Not a heck of a lot going on. SVIX down 1/10 of a point, hanging out at 21.15. It flirted with 21.5 a few times. It has been a good couple of weeks to override SVIX. I'm just saying out there. We were talking about that a few weeks ago on the show. We've been talking about that a lot on Options Oddities. We'll get to that a little bit later. If you're hanging out in the Pro Hangout, Options Oddities coming at you right after this show yet again. UVIX, again, kind of unched, hanging out around the 10 handle. UVXY, 10.5, kind of unched as well. And VXX, right around 33.25, also kind of unched. And none of them putting up any appreciable numbers on the volume side this week. So that's the entirety of your Vol ETP breakdown. Mr. Rhoads, anything catching your eye in the Vol ETP averse, sir?
No, but I'm just gonna because there's nothing going on there, and there's something I haven't updated lately. The Dees 220 put spread is up $2.30.
Oh, my favorite! Yeah, my favorite trap. And now they closed some of it. Is it most of it still open?
No, it's still all open. It's 100. The open interest is 152.
I thought they came for some of it. Oh, they're riding that.
There was a different trade using the 200s.
Oh, okay, that's right.
So there we go. I don't know if it was somebody thinking about copying it and then backed out or what?
We need to make that into an indicator, like the put watch, the VIX put watch. That's.
I think we'll be We'll have a little calendar because we're going to go on video soon, right? We'll have a little countdown, like countdown to shutdown, countdown to D's 220 put spread expiration.
Speaking of counting things down, our poll just expired for the question of the week. We made it live this time a week ago on the show because we were debating gold versus VIX, the subject of your vol conference this week as well. Mr. Rock Lobster and Mr. Dr. VIX, what do you think won? We asked folks, what is the better gauge of market sentiment right now, gold or VIX? What did folks choose? Just expired.
Gold.
Interesting.
Gold.
Yeah, you are correct.
Because I said gold, and I haven't won anything in forever on here. It's time for me to get a win.
That is correct. 57.6%. Gold was much higher earlier in the week, so some VIX folks came in, looks like during the show, to bump that VIX up to 42.4%, because VIX was, should say gold was at 2/3 or higher most of the week. So a little bit of love for VIX coming in towards the end of the week. But right now, gold is expressing a sentiment that a lot of folks are apparently feeling. Speaking of which, our new question of the week just went live. We're launching them earlier now. Instead of Monday, we're launching them on Friday because it's fun to have something to talk about here on Vol Views. And you guys just inspired it. Mr. Rock Lobster, the longest shutdown in the history of the government was 35 days. That's going back to Trump 1 administration. Our question of the week for next week, quite simply, will this shutdown last longer or shorter? Just went live a few minutes ago. Which way do you think our people are leaning in the early voting, sir?
I think the people are going to lean shorter. However, I'm going to say Trump is going to do what he does. He goes Trumpian. He goes bigly.
He does like a record. He does like to put his name.
I do not think he's going to fade on or cave on this one, but who knows? But I think it will be longer.
It may be a dubious record, but it'd be a record nonetheless. Mr. Rock Lobster, you going longer? Excuse me, Dr. VIX, longer, shorter? We also put in a fun F this, I'm going to cash.
That's kind of how I feel, and I actually flipped a coin for my answer.
Oh,
so I'm glad that third answer's in there because I can't imagine, but I'm a numbers person. I'm not a person. I don't understand why people do a lot of the things that they do. I should never leave my couch. But you would think that's not a distinction that he would want. But I can't figure out what most people are thinking.
So your heart is saying shorter.
That freaking guy.
The cynic in you is going longer. So there you go. And it looks like our audience agrees. 75% in the early voting saying longer. 25% going shorter. And no one so far has said F this going to cash. So I think a lot of people probably have that sentiment. Speaking of a sentiment, let's see what sentiment we have this week as it's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, as we're coming into the end of the show, it seems like some of the bloom has come off the rose, if ever so slightly. The S&P has now ticked red, slightly, 0.01%, but it has given up that roughly 0.25% rally or so, 1/3% rally it had earlier today. Dow's still up, but up 2/3%, and NASDAQ ticking off 0.5% now. And VIX cash, as we're coming into the end of the show, hanging out 1684, listeners, which puts us, let's see, on the show last week, it was myself, it was Dr. VIX, and it was the rockingest of lobsters. Oh, did I say 1683? Mother effer. All right, I was at 1673. Let's just rerun that right now. Let's just check. 1681. All right, it dropped. Woohoo! All right, crystal ball for me. Finally, I needed one for a little bit. All right, there we go. I was at 16s. I said I was feeling, I don't do this very often, but I liked where I was feeling exactly the same for a week later. And there we go, listeners. Crystal ball, bullseye. There we go. I'll put the actual level here so folks, we can have it for posterity. All right. I needed a little bullseye. It's been a little bit. I've had a little bit of a drought. But I was telling you about the puts. I was feeling it this week, Mr. Rock Lobster. I put my money where my mouth is, or in this case, I did not. I did not buy any premium. And it worked out. The Rock Lobster was feeling a historically appropriate 1492, and Russell was 1596. I went first last week and I crushed it, but I won this week. So I will opt to go last. Mr. Rock Lobster, what you got for us?
I think we're going to have a little more of the same. We might be a little lower. I'll go 1650. 1650.
1650 for the Rock Lobster. Mr. Doctovix, what are you feeling, sir?
The quant model says 1696.
The quant model. You're just blaming. You want something to blame.
Hey, that number, I was darn close at the beginning of the show.
1596, you were looking all right. And
I was looking all right until somebody came in and started bumping that VIX up.
The show is a fickle mistress out there. So that means I go last, listeners. What am I feeling this time next week? I might feel a little bit more spice. I might say, that's the question is how much. I'm thinking 17 double, somewhere in a 1735. I'm going to say 1750. No, I'll tell you what. I will split the uprights. I will say 1745 for this time next. So I'm continually climbing that wall of worry and vol, listeners. That music means we are done for this episode this week. I hope you had a good time out there. If you're hanging out in the pro, just hang out. We'll be back in a little bit to talk all things unusual, wild trades on options, oddities, and all sorts of fun. SVIX overwrites, Nokia calendars, all sorts of fun. But before we go, Mr. Rock Lobster, if folks want to be flashed by you in a dark alley, maybe 5 or perhaps 10 times, where should they go? What should they do?
Yes. Optionpit.com is you can get flashed. Well, maybe weekly if you really want it. Optionpit.com is the place to go. 188-TRADE-01.
There you go. Choose your flash frequency, and you too can have a good time out there. Mr. Rhoads, our folks actually in the chat wanted to know about your papers update. Do you have any update for them?
Yeah,
you want to give them?
We ran the numbers on liquid versus non-liquid option series, and the non-liquid option series work a whole lot better than those liquid options when you're following block trades. So we should have that. We should have those results out in the next few days or so.
It does make a little bit of sense. There's a lot of noise sneaking into your Apples and your Teslas, whereas you got a name that does 50 contracts a day and it puts up 10,000. Maybe a little bit more signal in that one. There certainly is some logic to that. We do lean when we do options oddities coming up in a little bit. Plug. We do tend to lean to a lot more smaller, lesser known names. You're very rarely going to hear an Apple or a Tesla come up on that show. It's always kind of wild stuff, which makes it A, more fun, and B, I think you're right. I think it does have a little bit more value to that information. And if folks want to check all that out for themselves, where should they go? What should they do?
As I put new pieces of material out, I always tweet them. So, and it's my full name, at Russell Rhoads. That's just anything I do, I put it there.
2 S's, 2 L's, RHOADS. If you hit the Tampa Weatherman, you've gone too far. And while you're checking things out online, you know where to go. tastytrade.com/podcasts. The place to go to kick the tires and light the fire. See what the Tasty Trade folks have to offer you. They really want the Vol Views listener. You folks are kind of the creme de la creme out there. They want you folks bringing your Vol savvy and your trading savvy and maybe your decent account size and frequency over to Tasty Trade. So kick the tires and light the fires. Tell them we sent you. tastytrade.com/podcast to see what offers they have for you. That's going to do it for us on Vol Views. If you're hanging out in the pro, we'll be back in a few seconds to break down all the wild paper that caught our eye this week. And spoiler alert, it's in a lot of small names, which makes it always more fun. And then we'll be back after that to wrap up our broadcast week, talking a little bit of Thor, the hot options report. So if you're yet another reason why, if you're just listening to Vol Views, you should be subscribed to the full network. A lot of cool stuff coming at you there these days. And we're back again next week with our usual array of content all the way through to next Friday. Can I score another bullseye? We'll find out, as it is time for another episode of Volatility Views. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.